How have clients been behaving?
So first of all, thank you for having me. I'm very pleased to be here. Well, clients, like everybody, have been quite surprised by what has happened at the beginning of April, the reversal a week later. But I would say for the moment, we were also very impressed. Also looking back at 5 years ago or so, clients have remained very composed. They have not panicked. And depending on the asset class, actually, we saw a lot of trading activities. For example, FX. We have seen much more trading activity than before. Other asset classes, a bit more cautious.
What do you worry about the most, actually, in terms of, again, client behavior, if people want to get out of the markets, or just this volatility that could, at the margin, benefit, but also scare some people off?
Well, it's very difficult to judge at the moment. At the moment, this kind of volatility is obviously good for trading activities. For us, obviously, we worried that at some point something is going to break somewhere and then we're going to go fully risk off. But this is not our main scenario. This is not what we see. And actually, markets have rebounded very well. So hopefully this is not going to happen.
Yeah, and again, we always look at the plumbing, actually, in markets to make sure that everything's okay. For the moment, it seems that everything was fine. There's no liquidity concerns. There's nothing that makes you uneasy about the stability of the financial system.
No, this is correct. And, we watch very closely to the, for example, to the Treasury auctions. And lately, the Treasury auctions went very well. Actually, we tightened spreads. So, no, we see that at the moment, the market is after the shock. I would say there was a shock. After that shock, the market is stabilizing. And now we will see how it's going to develop. Now, can we exclude that another wave is going to come? Probably not. But for the moment, is so good. For the moment.
There's also positives and negatives if you're sitting in Switzerland. I guess you're seen as a bit of a haven, but then you can also have the currency move on the back for maybe the wrong reasons.
Well, yes. I mean, obviously, for us as a business being based in Switzerland, we are a global boutique, so we are present from Sydney to São Paulo in all the major financial centers. But for us, clearly, private banking is another form of geopolitical risk diversification. At the moment, geopolitical tensions are very high, so obviously we benefit from that trend. On the other hand, we report in Swiss francs, but 50% of our assets under management of our clients are in dollars. So clearly for us, the dollar, a weak dollar is not good for us. So this is where we see the other impact, which is not positive for us.
Do you think, and this is something that we've been trying to speak to, senior bankers, we asked David Solomon of Goldman Sachs, Bernie Mensah of Bank of America, whether, the geopolitics actually means that you win and lose business depending on where your headquarters. Will European, financial services get a bit more business from people that look at the U.S. and say maybe that's not the right time to bank with them?
Well, that's a very good question. It's very difficult, but what we see is that for us, for our business, what is important is wealth generation, and for the moment, wealth generation is still okay, but also where the wealth is moving. And for us, it's very important to be very close to our clients. And at the moment, we see that actually clients like the safe haven of a Swiss private bank or Switzerland, but in general also of all the other financial centers. We are based here in London, and we see that actually London is doing pretty well in terms of capturing these flows. So we will see how it's going to develop, but for the moment, it's good. So we are quite confident.
Are you eyeing any new parts of the markets? I don't know whether we should be looking out for any new banking licenses in any parts of the world, or even M&A.
No, let's say in terms of our footprint, we are fine as we are. We are present in the major financial centers, as I said, from Australia to Hong Kong, Singapore, London, Luxembourg, Monaco, and Switzerland. And on the other side, we are in Miami, Cayman, and Bahamas. So we are okay in terms of footprint. But, for example, we opened a desk here in London to cater for Asian clients. We have seen that some clients from Asia, they actually like to diversify into Europe. And what we see is that, diversification, which is for us a mantra, a key, is not only about asset classes, but is also about financial centers. So we see that wealthy clients are trying to move their assets. As you know, there were anecdotal evidence some American wealthy clients are coming back to Europe, but some Europeans are looking at Asia. So at the moment, it's very fluid, and you need to be close to your clients, and you need to have people that can talk the language of your clients.
Have you seen UK clients, and this is one of the big stories that we're trying to follow here in the UK, have you seen wealthy UK clients actually move out because of some of the tax regimes imposed?
Well, yes, I think that is a fact, and because of the changes, we have seen UK clients moving, to Dubai, to Switzerland, to Milan, to Jersey, depending on the preference. But what we have seen, on the other hand, is that they still keep a lot of the assets here, the reality is that wealthy clients are global citizens, so they might move a part of the family, they might move their residency, but where they manage money doesn't always overlap.
Are they optimistic about Europe? I think 5-6 months ago, there was so much hope that the U.S. would power ahead, and actually Europe, there was a danger that it was really left behind. And now it feels like if they do the right things, they could catch up.
No, actually, I think even in January when we were in Davos, I think that, we started saying that maybe we should rotate back into Europe. Obviously, we did not expect the 2nd of April, and we did not expect the change in Germany, which I think is I lived in Germany many years. I think it's historic what has happened. So I think Europe will do, I think, pretty well. The continent is pretty resilient, and if really Germany is going to invest all this, almost $1 trillion in infrastructure and other sectors, this for sure will stimulate the activity in the continent.
When you look at U.S. clients, or actually that U.S. base, are they waiting for trade to kind of settle down before they decide where they allocate money? Or no matter what happens, there's been a shift?
No, I think, I don't have real evidence, real data about the behavior of American clients, but I for sure see that there has been a move out of equities, that's clear. Now, for American clients, some clients love to go abroad. Mm-hmm. Other clients are very more domestic oriented. So this is, we will see how it's going to develop. But anecdotally, we have heard that clients are coming back to Europe, are coming back to Switzerland, coming back to London. That's for sure also a trend.
Giorgio, you're talking about the footprint, and you were saying that you're pretty happy with the way it is now. Is there anything on the table that you would be looking to buy to add non-organically?
Well, yes. I think, our strategy is primarily an organic growth strategy. Sustainable and profitable growth has been our mantra since 2019, and we have delivered pretty well. Now, obviously, we like also to make M&A. We have excess capital. Our business model is a capital light growth model, so we have excess capital. And we made a small acquisition now in February. We would love to add to where we're already present. We have simple criteria. We would like, as I said, to add where we're already present. For us, it's very important the cultural fit, mm-hmm. because our culture is quite, entrepreneurial and I would say progressive. And on the other hand, we need obviously to pay the right price in order to achieve a return on investment of 10% over 3 years.
So this would be similar to what you bought with Cité Gestion in Switzerland, or is it also something possible cross-border?
No, also cross-border. We would love to make acquisitions in Asia. We would love to make acquisitions here in London. We would love to make acquisitions where we're already present. Now, at the moment, I must say, everybody talks about consolidation, but there are not many targets around. Now, we try to obviously be very active, yeah. And we are scouting the market all the time. But yes, we would love to do that, and we are trying to become much more systematic in the way we look at possible targets.
Why not many targets? Because it feels like actually there could be an opportunity given the market turmoil.
Well, as always in our capitalistic model, you need a willing buyer and a willing seller. So we are a willing buyer. Not always we find the willing sellers. So, but on the other hand, obviously people know that we are interested. I think we have a good framework. I think that we know how to integrate to create win-win situations also for the companies that join us. So overall, we hope that Cité Gestion is the first of a series of acquisitions.